I was giving a pitch once, and when I was giving this pitch, a gentleman in the audience got up and said, "Why do I care that you're using blockchain? Why do I care? I mean, I wouldn't care if you're using a notepad if it solves the problem." Whereas when I talk to people that are overseas in USA, they they try and create a loophole so that they don't get deemed a financial product, even though that's exactly what they're doing.
Is it because they don't want the risk of having to pay back the customer?
Yeah, 100%. Last week, they had a massive announcement that they'd just developed a tokenization distribution platform for fund managers to basically log in and tokenize their managed fund.
Oh wow, that's
Yeah, it's
crazy.
huge.
Hi everyone, welcome back to the show. Today I'm joined by my favorite Tong as well as a very special guest, Ishan Dan. Ishan is the founder of a company called ReGenX. But yeah, Ishan, I'll let you do the intro. Do you want to give us a quick overview of what ReGenX is and how you got started?
Yeah, sure. Thank you guys for having me on your podcast. It's an honor to be, part of this awesome podcast you've got. I'm the founder and CEO of my startup called ReGenX. To give you a bit of an idea, ReGenX is a investment platform that helps institutional and wholesale investors access, invest, and exit green infrastructure projects. And we do that now using blockchain technology, digital ledger technology, to help solve some of the biggest problems in climate investing today. I guess my career spans over maybe 20 years. I started off as a stockbroker, junior stockbroker in Australia. And then after that, I sort of went into wealth management. And I've sort of been in wealth management for about 20 years. And then I worked for a wealth management platform. Something that I noticed that was sort of occurring and was becoming predominant amongst that wealth management market was a growing demand for impact investment. I mean, people first and foremost always want to know that their money is generating a return. But nowadays, investors also demand that their money is having a positive impact on the planet and it's not harming the planet. And, predominantly these sorts of investments have always been alternative private deals. To get access to these sorts of deals is very manual, it's exclusive, and deal flow is rather fragmented. Deals are very hard to access. And then once you're in, how do you get out? There's no liquidity. So these are some of the big problems that I wanted to solve. And I think it was towards the end of COVID, I decided to give up my career and pursue a career as a startup founder, which has been a real interesting journey to say the least, in a good way. And yeah, it's more like it's more like reminds me of uni days actually. Um,
Hmm.
and yeah, so that's where I am now.
I just thought about my uni days actually. While I was still at university, I was taking a course called Impact Investing
Oh,
at the University of Melbourne, and then we were learning about ESG and ESG principles. Is that what you're doing similar to that?
yeah. So I mean, I don't want to get too detailed because it's quite an opinionated topic
Right.
actually. But so the principles behind ESG. I mean, when we're talking about investing, that is, um, ESG is like a framework that's used by investors to either select or not select certain companies. So let's say if you're a fund manager and you want to uh, put a group of stock market listed companies into your exchange listed fund, then you would use the ESG framework to pull out any stocks that were either war related, gambling, and not that were not fossil fuel based out of
Right.
the portfolio, and then that would be your green listed portfolio. The
Mm-hmm.
problem with this, and the problem that occurs to this very day, is that this is all based on sustainability claims by the company, right? So the problem here is you're relying on either the company's good word that
Mm-hmm.
they're not dealing in any of it, because you can't see into, how do you know that a company's, you have no idea what a company's doing. You're taking their word that they're doing this and this, or you're taking a third party auditor's report that they're doing this and this, but you can't actually see into the company or actually know with 100% transparency that they're not dealing in XYZ. And this
Mm-hmm.
is the big problem now with impact investing. It's one step closer to that. And what I mean by that
Right.
is with the impact investing, you're looking now on a more or less on a project level, right? And you're investing in a project, or I guess a company, but investing in that based on not just the profit that it delivers, but the positive, measurable impact it delivers on the planet. So
Mm.
let's think about that for a
Okay.
minute. So let's take, for example, a solar power project. Now, it could be a company, it could be just a project on its own, but you're investing in this project because because of the capital and capital it can potentially generate and the yield it can generate, that's financial metrics. And then number three, you're looking at it based on how much clean energy it generates and how much carbon it offsets. So they're your impact investment metrics, right? So it's
Right.
a step closer
Yeah.
towards that. But then the question comes about it again. How do you know with
Right.
100% certainty that this solar power project is even on? How do you know that it's
Mm-hmm.
actually generating that much power?
Mm-hmm.
I mean, someone could say it is, but is it really? And now here is where blockchain and digital ledger technology comes into the equation. And I
Mm-hmm.
remember early on in my startup days, I saw asset tokenization 4 years ago, and I thought, wow, this is brilliant. Yeah,
Yeah. What
maybe a
is
short.
asset tokenization?
So yeah, as a finance person and not a crypto person, I first saw asset tokenization, and I compared that to securitization back in
Mm-hmm.
the what
Right.
is it? Yeah, not, yeah, near the GFC time. Securitization, the digital version of that. So basically, what we're doing is, in layman's terms, for example, when you buy a house, it's done all by paperwork, and the
Mm-hmm.
title of the house is held at the state revenue, where someone holds a title on a piece of paper. Asset tokenization simply means the digitization of that piece of paper into a share, a digital share. We'll call it a token, right? That's
Yeah.
really what it is. And then using fractionalization, splitting it up, we split that token up into a million pieces,
Mm-hmm.
and then we sell them. And then that money
Okay.
comes back to the whoever holds the asset, right? And those token holders now own part of that asset. So in other words, what we're really doing there is like what the share market does,
Yeah.
essentially. Yeah. So I saw that as a brilliant way to digitize potentially illiquid private assets um, that were hard to access, and to give sort of these institutional investors and wholesale investors an exit option that had never been there before.
So before we go further, can you just explain what illiquid private asset is? Like, can you give us an example of that?
Yeah, yeah, sure. I'll give you an example. Let's say, for argument's sake, um, you wanted to build a solar power project and it's going to cost you 50 million, right?
Yeah.
That's a small to that's a medium size solar power project.
Mm-hmm.
To raise 50 million to fund the development of that project, you can't go to mum and dad investors, because mum and dad investors don't have that sort of money. You need to reach hundreds of thousands of investors. That's a hard job.
Yeah.
So
Yeah.
the easiest way to raise capital to fund the development of this project is by approaching a lead institutional investor, Either that may be a big institutional investor that wants to gain access to this, a super fund. It could be, a family office, um, those sorts of investors, and they'll put up the main capital to fund the development of this project. It could be a
Mm-hmm.
big managed fund, and that managed fund may have. So it could be, for argument's sake, this is how big skyscrapers are built. So a lot of them, they'll have it may be a fund manager that has a managed fund that can put up the capital to build, $100 million skyscraper. But in that fund, there may be thousands of high net worth investors.
Yeah.
Now, the problem occurs when you want to sell out. How do you
Mm.
exit that fund? Who's gonna, as an institutional investor, who's gonna buy? There's no buyers that are actually gonna, that are readily available, that are going to be able to, buy, at the price that you want. So by, breaking up breaking up the sizes of the investment amounts,
Mm-hmm.
um, we're able to create a secondary market, and create an exit plan for the original institutional investors. I can give you sort of going back to that solar power project. Let's say, for argument's sake, a solar power project needs to be built. It's going to cost 10 million. We've got two big institutional investors. They're going to put 5 million in each.
Yeah.
Right? And then the solar power project gets built, and then, they've made a good. They're now sitting on a gold mine. That original 10 million solar power project is probably worth 50 mil now, but
Yeah.
it's not going to go up in value anymore because it's just producing a yield of 15. It's producing profit, steady
Mm-hmm.
profit every year, produces the same thing, and it will produce that for the next 25 years. But now one of the investors, the institutional investors that put in the 5 mil, that's now worth whatever it is. Maybe he just tripled his money. That institutional investor, they want to exit and they want to take their money after 3 years.
Yeah.
Now, how do they do that? Who's gonna be able to buy that massive $15 million chunk or whatever it is?
Mm-hmm.
There's no market that's readily available. So what we do is we tokenize that, either the entire amount or whatever they want to sell, that we tokenize that, and then we offer those tokens to a readily available market, because it's attractive for anyone that wants to buy a stable solar power project that's built and delivers a 15% yield year after year for the next 25 years.
Mm.
Now, that is quite attractive to any investor, especially, someone that wants yield. Yeah. So we can easily split that up, and I mean, we could lower the minimums down to 2,000, 5,000,
Mm-hmm.
$100,
Yeah.
whatever. Yeah. So does that make sense?
Yep. I think that makes sense, and I think you did a great job of explaining it. My next question is like, let's say I'm an individual and I want to impact invest, like invest in something that's good for the environment as well as make some money. So like, what are my current options? Obviously one of them is being ReGenX, but are there any other options as well? And like, can you maybe give us a highlight of what are the maybe pros and cons of them?
Mm. Okay. So first question is, what sort of investor are you? And this chain depends on what country you're from, but let's just, for argument's sake, say you're Australian. Yeah, the first question is, are you a mum and dad retail investor, or are you a wholesale investor? And there is a big difference between the two. Let's say, for argument's sake, a wholesale investor doesn't mean that you're rich or not. A wholesale investor just means it's a classification. So if you have a house and there's a certain figure. If you know, it's a risk-based classification that puts you. There are 3 million wholesale investors in Australia, probably more now, four
Mm-hmm.
million. So if you have a house, and your combined income is over 200, something like that, thousand, then you can be classified as a wholesale investor. You can get
Yeah.
access to these sorts of investment products. If you're a retail investor, right, it's deemed on risk. So these sorts of products are deemed too risky for retail investors that don't understand probably the high risk, associated with some of these products. So,
Mm-hmm.
yeah, if you're a retail investor, to get access to impact investment products, you would probably either number one, go through the share market and you can invest in a company that would invest
Yeah.
in these sorts of products, or number
Yeah.
two, you can invest in a professional asset manager, fund manager like Beta Shares or iShares, BlackRock's iShares, and then they have listed funds that have impact investment companies in there.
Hmm.
So Beta Shares one is maybe Earth, EARTH, and that's a that's the listed code on the Australian Stock Exchange.
Yeah.
There are a whole heap of them, I think, and
Yeah.
then you get access to that. Then the next step after that would be through a crowdfunding platform. I dare say you may, or no, there are some that are retail based, there are some that are wholesale based. That will give you access to private companies that startups, I could say,
Yeah.
startups that need funding, climate tech startups that require funding. And so what they do is they make it's like a Kickstarter that they'll go
Yeah.
onto a crowdfunding platform, and the amounts are usually small. So they're usually raising anything under 1 million, and through a smaller investor base. Then after that is step two. After that, you'll need to go through a financial advisor or a wealth manager or a private client advisor. They all do the same sort of thing, just different levels. That through your wealth manager will be able to put you into a impact investment fund, and that's
Mm-hmm.
a fund manager that approaches uh, a solar power project. I can give you an example: Impact Investment Group or Octopus Investments. They will they will approach a big solar power project, and then you are investing in a unitized trust fund.
Mm-hmm.
Um, and but the minimums may start from 100,000 to 500,000,
Oh wow.
right?
Okay.
Yeah,
Yeah.
definitely. And then after that, then you are looking at family office type deals or small syndicate type deals that are very hard to access and come across, but generate very high returns.
Mm-hmm. Yeah.
Yeah, so that is and then the other side of this, uh, there are new platforms that are coming out that allow you to invest in carbon credits and
Mm-hmm.
biodiversity credits. Is that impact investing? It depends on the country you're investing in. In Australia, it's considered impact investing. I don't know if it is in other countries. A lot of other countries are not. That's another area. Yeah,
Yeah.
it's
Yeah.
still grey area. Yeah,
Still trying to understand. You're trying to combine blockchain technology essentially with impact investing, but how does blockchain technology necessarily help with the transparency thing? Because you did
yeah,
mention that transparency thing was a whole issue on its own before this. Could you elaborate on that, please?
yeah. Sure, definitely. Yeah, I often have this chat with a lot of the guy. I've sort of connected with a lot of people in the blockchain community. Just to expand my networks and understand the technology and everything. Coming uh, from the traditional finance space, I see blockchain as the database that everything is stored on, not the technology that's going to disrupt the way that things work at the moment. Because the
Mm-hmm.
way things work at the moment, they work. Or I mean, you can do. People say to me, "Well, blockchain is really good because you can do fractional ownership on blockchain." You could do
Mm-hmm.
fractional ownership on crowdfunding platforms, and they do that rather cheap. And they do that
Right.
using something in America called Reg C. You can do that in Australia using crowdfunding. They do that all the time, and the minimums there are $5. Um, you can. Some people say blockchain is cheap and fast. Well, that doesn't. These platforms like Stake, they don't even charge investors, and speed is irrelevant with illiquid assets. I mean, because it's not like the share market where you're trying to do hundreds of thousands of transactions every second. Speed is irrelevant. So the reason why I use blockchain there are two reasons. The first reason is is it has to be a reason that makes blockchain unique, and the reason is trust. The reason why greenwashing exists today is because no one trusts green investing, and you can see it in the super funds. They're getting fined because how do you trust any? No one trusts that. You know, it's everyone. Oh yeah, we're investing in our funds green. We're investing. Then 2 years later, you find out that you're investing in oil companies. So blockchain eliminates that. I mean, but there are limitations. You can't place every project on blockchain. It's hard to
Right.
place, you know, agricultural projects or biodiversity projects. That it's just, the technology just yet hasn't caught up. Reason being is you need a separate climate analytics company to measure, because it has to be measurable. You have to measure the data, so the data has to be measurable. But once the data is measurable, which is why I'm focusing only on renewable energy. That data, the technology is there already. That is highly efficient. I mean, on every solar panel, you can record 8 bits of data, the temperature, the voltage, all that. So by placing that on the blockchain, the investor, and by showing it to the investor sees live, second by second, the impact that their project is creating on the planet. That's the first reason, right? The second reason is a reason uh, for institutional investors. This is the space that I understand, and that space I understand is there is no easy exit or liquidity option for institutional investors to actually exit their position. So blockchain provides that exit for institutional investors. And the funny thing is that they all tie into each other: access, liquidity, and transparency. So what you solve one, then you solve the other two, and they sort of all in a triangle solve each other.
Yep.
That is the reason why, but see, this all depends on what you're putting on blockchain. I mean, this wouldn't be, I mean, the type of asset, real world asset that you're putting onto blockchain may be different. But for green projects, it's trust. That wouldn't apply with uh, private credit, or I mean, like housing, or whatever it is, or trust is different there. It's not as a big problem. Something else is, yeah. So there you go. If that answers the question.
Yep, yep.
Yeah, yeah,
Oh,
it definitely does. Could another follow up question I have is that you could still potentially onboard projects that claim to be green, right? But in reality aren't. Maybe they are claiming to be green, and then maybe um, there's not enough research done on them or something like that. Is that right?
Hundred
That's like
percent,
one disadvantage.
100%, and that's what ruins our credibility. I mean,
Yep.
if you put a project on the platform and you put it on a blockchain platform, then very soon your investors are going to realize that this thing's not really generating any green energy because the data is real. So that leads to the first question: is to protect us as a platform. We have a vetting process that vets and verifies the projects, especially the greenfield projects, the projects that aren't even built yet. We need to know what's going to be built. So one thing that we ask is, or we employ, firstly, because we have a climate analytics company that we work with, so we'll get a third
Yep.
party audit done, so that satisfies us that that
Right.
project is verified. Then once it's on the blockchain, we can see where the money's going. I mean, we can see where the money's going. Then once that project generates profit, a return, that comes back through the platform, and that gets tokenized out back to the token holders. Once the carbon credits are
Right.
generated, that goes through the platform. Well, it goes through another
okay.
but it eventually comes through the platform. So carbon credits are tokenized, goes back to that's another topic entirely. But
Yeah,
Yep.
yeah.
anyway, yeah.
No, I think I get like the basic overview. But now let's say like I'm an investor again, and I want to buy these tokens. So where do I do that? And then also the follow up question is, how will I actually make money? Like, yeah, from those. Like, let's say I invest in the solar farm that you mentioned. Will I be able to actually get yields from just investing in the token?
Yeah. Okay. So, yeah, for first and foremost, in Australia, you have to be a wholesale investor to
Mm-hmm.
gain access to any of these products. Um,
Yeah.
so the first thing is it depends on the size of the solar power project. If we're onboarding a solar project, which is um, more than likely that's a mid-sized solar project, what we will do, we will obviously you see it's 50 mil, say it's a 10 mil solar project. Um, what we'll need is we'll need a lead institutional investor together with maybe one or two or three smaller family offices, or to put the bulk of the money in.
Yeah.
And let's say that's it takes 3 years to build a proper solar project. So
Mm-hmm.
they don't get the money straight away. There'll be maybe four capital calls throughout the 3 years, and there'll be four targets for them to reach milestone events during those
Mm-hmm.
4 years. Having reached each one, 2 million is released after
Mm-hmm.
every one.
Yeah.
Upon every release, the price of the valuation of the project will increase,
Yeah.
obviously. And as the share market does, share prices are a reflection of the net asset value and the future earnings of a company. The same
Mm-hmm.
thing applies to a project. The token price should reflect the net asset value of the project and the future earnings of that project, not supply and demand,
Yeah.
right? So after the 3 years, this project will be worth whatever, right? And then
Mm-hmm.
after the 3 years, those original investors are now able to sell the original investment that they had, the tokens that they have, because
Mm-hmm.
they're locked in for that 3 years, right?
Yeah.
Until the project's built, obviously. Once the project's
Yeah.
built, then they can sell. Now,
Mm-hmm.
this is where the interesting part comes in. They can sell their um, token holdings, right? Now, I've built this on a digital ledger called Stellar. Stellar are a layer one blockchain, an American layer one blockchain, and they've got 8 million odd investors that are on that blockchain.
Yeah.
So the idea is eventually is after the 3 years, these institutional investors can now sell through a secondary market, secondary exchange to anyone that is on Stellar's secondary market exchange all around the
Okay.
world, their tokens, right?
Yeah.
It'll be a yield bearing token, and that yield bearing token will be the profit that comes from the solar generated. It's called a PPA in Australia, which is a power agreement. So every solar project has an agreement with a retail power company like Origin Energy or whoever it is, right?
Mm-hmm.
So that money will come back through the platform and then go to the token holders direct.
Okay. Wow.
New
That's
token
super
holders, whoever
interesting.
the token holders are. Yeah.
Yeah. Yeah. Yeah. That makes sense.
So
And
yeah,
then
you really have to have an understanding of how traditional finance works and how the
yeah.
current system works. Yeah.
Mm-hmm. Yeah. And then my follow-up question is like, at what stage does RegenX come into this picture? Like, do you come in when the solar power project is being developed, or do you guys come in after it has been completed?
Yeah. So we're a capital raising platform. So that's the first thing
Okay.
to that's what we are. I mean, if
Okay.
you can put it in a fancy way. Someone said this to me once. We're a Web3 crowdfunding platform for institutional
Mm-hmm.
grade green projects. Does that sort of make
Yeah.
sense?
Yeah.
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 Yeah, that makes sense.
So Yeah, so we're a capital raising platform for those projects. So we can either come in as a greenfield um, fundraising platform. So greenfield meaning that the project is not built yet, and they need to raise money to build the project, right?
Mm-hmm.
Or we can come in as a brownfield capital raising project where, for argument's sake, say there's a project that's already built, it's got two investors, they're built to put in 5 mil each. Now it's
Yeah.
built, but they want to get out.
Yeah.
So what we do is we come in and we tokenize whatever percent of their ownership that they want, and then we sell that through the platform to the network of investors that want to buy this established low risk solar project that is generating a yield of XYZ and clean energy XYZ. Yeah, does that make sense?
Yeah. Okay.
Yeah.
Yeah, that
At
makes
no
sense.
stage do we get involved in the development. We simply, or do we get involved in the climate analytics?
Yeah.
We are using third parties to do that, and we
Yeah.
simply report that data back to the investor or the development of the project. We simply report that back to the investor. Um, yeah, does that make
Yeah.
sense? Yeah.
Yeah, no, that makes perfect sense. I think, yeah. And like my last question about this is like what happens if the project fails? Like do people get their money back or no?
Yeah, well, this is an interesting part. It's exactly the same as what would happen if that happens in the existing world.
Okay.
So, yeah, so unlike the crypto world, where if someone does a pump and dump and then runs off with the money, nothing happens and the investors just lose their money.
Yeah.
That doesn't happen in this world because this is a financial product, it's a financial security. So,
Mhm.
investors are protected by Australian financial services laws.
Oh,
So,
okay.
yeah, yeah, 100%. So yeah, there is full transparency, and obviously after that, administrators come in and proper procedures occur. But like I said, there is risk. Obviously, if something happens and the project goes down, then as it would normally happen, you know, administrators go in, creditors are there, and if we can generate some whatever can be salvaged is returned back to the token holders,
Investor.
as
Yeah.
would happen with a company that's listed on the stock exchange. Shareholders, yeah,
Okay.
shareholders don't actually. Yeah, it's a bit different, but yeah.
No, that makes sense.
I think most people nowadays they still kind of associate cryptos with scams, just because of past events that have happened.
Mm.
How do you sort of build trust in the project that you're working on with RegenX?
That's this has been my biggest headache for the last 3 years.
Yeah.
Trying to explain to everyone, I'm not crypto. I've got nothing to do with crypto. I'm not crypto at all. But the minute that, and you know what? This is all changing now. Only in the last 4 months, 6 months, this has all
Wow.
changed.
Okay.
But before that, I literally did not even mention blockchain. I didn't mention anything to do because I was giving a pitch once, and when I was giving this pitch, a gentleman in the audience got up and said, "Why do I care that you're using blockchain? Why do I care? I
Mm.
mean, I wouldn't care if you're using a notepad if it solves the problem."
Hmm.
And he's right.
That's funny.
Why does it matter? Why does it matter if I'm using blockchain? For an investor, for a user, why does it matter? What do they even need to know? At the moment, our banks are upgrading their systems. NAB was onto it, ANZ was already done it. They're all digital ledger technology, like they've got tokenization platforms. Do
Mm.
the investor, anyone that has a bank account, do they know? No, they haven't told anyone. The entire traditional finance is, if you look, everyone, all the big investment banks, they're all upgrading their systems to digital ledger technology. But as I said, it's not a disruptive technology. It's just improving um, what's happening at the moment in the background. So the
Hmm.
front end should not change at all. So the front end of RegenX's platform looks like you're buying shares because
Okay.
the first project I got, the biggest problem was the investor didn't want to open a wallet.
Hmm.
Mm.
They were like, I want to
Right.
pay using Australian dollars or at worst, US dollars, because I'm transferring $1 million to gain ownership of this solar project. I'm not opening a
Mm.
wallet. So
Mm.
Stellar was able to do that.
Right. Okay.
Stellar is able to do that. Not many other blockchains can do that. They can, it's called off ramping and on ramping through an app called
Yep.
MoneyGram that's inside Stellar's blockchain. So an investor on RegenX can use Australian dollars and purchase and get that back into their account bank account using Australian dollars. And here's the other thing too. Because because crypto was like the Wild West, and there was there were scams left, right, and center. You know, one thing that was hard was convincing investors that by using my technology, you know, you're not increasing uh, you're not increasing the risk for an investor, and also that and giving them doubt that their money is not going to be there when they wake up in the morning tomorrow. And that's, I mean, the biggest the biggest thing that banks provide is trust and safety. You can wake up in the morning and know that your money is going to be in your bank account.
Yeah.
If
Mm-hmm.
you take that away, then this technology is not really helping, is it?
Mm-hmm.
Mm-hmm.
So that the biggest hurdle that I sort of had to overcome, number one, is Australia is highly regulated, extremely highly regulated, which is a good thing and a bad thing, but also a good thing now. And that is, so I've been working with ASIC, and I've had many meetings with them. And the one thing ASIC said to me is, we don't care what technology you use. At the end of the day, if it smells like and looks like a financial product, in that meaning that if you're selling on your product, your website, that you're going to generate money for somebody by putting their money into your product, and you're going to give them a financial return, hey, you're a financial security, you're a financial product. And if
Mm-hmm.
you're a financial product, why should you be treated any different from a bank, from a fund manager, from a stock exchange? Because you're doing exactly the same thing. So your investors that are investing in your financial product have to be, you know, protected, and protected under Australian financial services legislation by ASIC, and they're protected so that when something goes wrong, like the FTX collapse, they're protected. But in the case of the FTX collapse, they weren't, so they lost all their money. Does
Hmm.
that make sense? Yeah.
Yeah, that
Um,
makes sense.
so early on it was hard, but Australia now is soon to release a paper on, But what's good about it is, because we're so regulated, and because I'm from that industry, I understand the regulations. So these regulations when I first started this, there was no question about whether I was creating a financial product or not. It is a financial product. So I've always operated within the financial services legislation. So this has never been a problem. Whereas when I talk to people that are, overseas in USA, they they try and go around that whole, and
Right.
yeah, and it's just like, wait a minute, it's a financial product. You're trying to create. How are you trying to? They try and steer, like somehow create a loophole so that they don't get deemed a financial product, even though that's exactly what they're doing.
Is it because they don't want like the risk of having to pay back the customer? Like if it's a crypto project, they don't necessarily need to follow all the regulations.
Yeah, 100%,
Okay.
100%. Yeah. I mean, back in the day, it was pretty easy to raise a few million just from doing an ICO raise without following any regulations. And then if everyone loses their money, oh, whoopsie do. You see
Okay.
what I mean?
Yeah.
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 And it's exactly what was happening. Yeah. Whereas here, yeah, if that happened, you'd probably yeah, you'd be in real trouble.
Mm-hmm. Yeah. They'll pay
Yeah.
them back.
So that's the difference. Because at the end of the day, who are the people that are really getting hurt here? It's mum and dad
Mm-hmm.
investors that lose all their money. That's who needs
Hmm.
to be protected.
Yeah.
And we need to be protected from people that are scamming people. And Australia does a
Hmm.
good job at that. And
Yeah.
Singapore does as well.
Are there any other risks other than just like the negative perception of blockchain that are associated with your product, like in terms of blockchain?
Um, well, there are heaps of risks. I mean, it is inherently, private illiquid assets are inherently risky. But this
Yeah.
is risk that a wholesale investor can understand, and so can a wealth manager. There's market risk, as a lot of crypto enthusiasts have seen over the last 3 weeks. Any crypto listed token, or not token, I mean coin, will fall first. Will fall first, and will fall further than the general stock market fall, because because they're a riskier product than the stock market is. So once market sentiment changes, investors get rid of the most riskiest assets that they have in their portfolio, which happens to
Mm.
be Bitcoin, which happens to be Ethereum, which happens to be those. They will fall first and foremost before the broader stock market. They will fall further than the stock market will. And so there's the market risk. And then
Yeah.
obviously after that, you got the project needs still under, because you see my platform is based on an underlying project, and that underlying
Mm-hmm.
project still needs to be solid.
Yeah.
That project, there's the risk that that project falls through. Is a risk that it doesn't generate as much clean energy. Investors
Mm-hmm.
are still protected at all times, because you know I'm operating under an Australian financial services uh, license. Another thing too, is changes in regulation around the world. Sometimes, as you saw with China, they banned Bitcoin and any cryptocurrency. Now it's not the case anymore, but they did, and that was a blanket ban. So that meant
Yeah.
that was a massive change, and so sudden snaps like that can happen. And I'm not saying this could happen, but here's a bit of a interesting thing. When I was working for the wealth management platform a few years ago, before I started my startup, I onboarded one of Australia's first managed funds that held Bitcoin in it. Now, Australian wealth managers couldn't give advice on Bitcoin because Bitcoin wasn't deemed a financial product. So they
Yeah.
couldn't give advice. And so by placing Bitcoin in a managed fund and then putting it on a platform, that sort of so it sort of fit through a loophole, and then
Yeah.
financial advisors were able to give advice on that managed fund. So to put that
Uh,
actual fund on a platform, um, there was the big risk that what happens if that cold storage where all that Bitcoin is on gets stolen, or what happens if it
mm-hmm.
gets hacked? You
Yeah.
know, all the investors lose their money. So the way around that is through insurance. And I remember it was actually Lloyd's Bank that insured that managed fund for up to 300 million. So the same thing would go for ReGenX. If we've got projects, there is a real risk that those tokens can be hacked and the money stolen. So
Yeah.
we would insure every project, or have some insurance that covers, the projects that are on the platform. Yeah.
Okay. Makes sense.
Um, a question I had about your business in general is how do you make money? What is the business model like?
Okay. So this is an ever-changing question, but
Okay.
I guess as markets mature, become more educated. But there's one thing that hasn't changed, and that's the way that the first and foremost way we make money is through capital raising fees. Yeah, and that's, I guess, my background. It's very similar to
Yep.
doing an IPO, that is listing a company on the stock exchange, right? We would charge a capital raising fee of anywhere between 2 to 5% from the total amount that is raised on our platform. Solar Power Project wants to raise 10 mil. We charge 2 to 5% of that as a one-off fee. Then we would charge a annual servicing fee from the projects. That's for token issuance. It's for just for the data, the management of the real time data and the analytics that goes through it. Now, for investors at the start, uh, obviously it's free for all investors, and it'd be like that for a while. We would probably, as the platform matures, we may look to charge a membership platform fee for wealth managers, platform fee for family offices, and so forth. We
Yeah.
would also look to charge at the start. Obviously, these fees would be low, but as we go on, we would look to charge. This is later on. Once the project is built, the secondary market, we would charge trading fees in the secondary market. That's a buy and sell for
Okay.
retail investors. Yeah.
Okay, that makes sense. The other question I have is, because some people say that blockchain technology has huge environmental impacts, and
Mm.
since you're trying to reduce that, like, carbon footprint, yeah, like, what are the takes on that? How do you deal with the environmental impact of blockchain technology?
Well, the good the good thing is, I actually don't, and the reason being, this is why I decided to build on Stellar. Stellar is one of the only energy efficient blockchains. Reason being is because of its. This is really technical here, but a lot of blockchains they have to do some sort of work for their yeah. Stellar doesn't. What I'm told, it doesn't require that computational power, the
Yeah.
energy use compared to other blockchains.
Mm-hmm.
And that's not to like a lot of blockchains claim to be carbon neutral. That
Mm-hmm.
doesn't mean they're not taking power. Bitcoin, or, yeah, that doesn't mean they're like Polygon. They claim to be carbon neutral. That means they still require immense amounts of power on the Ethereum platform, whatever it is. But what they've done is they've gone ahead and bought carbon offsets so that
Mm.
they become
Right.
carbon neutral. Right.
Yeah.
That's not the case with Stellar. Stellar is a by nature a green blockchain that has wide-ranging sustainability goals. The blockchain itself has green projects all around the world, so it's built for that reason. Yeah.
Okay. I didn't know that. And is it built on the Ethereum network or is it some other
No,
network?
no. It's built on its own. It's layer one. It's a layer one
Oh,
blockchain.
okay. So it's its own blockchain.
Yeah.
Yeah.
It's its own blockchain.
Okay.
It's very similar to Ripple. Ripple and Stellar are sister blockchains, if I could call it that. Yeah.
Okay. Yeah, that makes
Okay.
sense.
And just so the listener kind of gets an idea of what they can expect with RegenX, what sort of real world projects have you guys onboarded already, um, through and supported through the blockchain?
Yeah. So we've just developed our MVP.
Oh,
So
okay.
yeah. So the platform is built, but the actual deal generation isn't flowing through the blockchain. It's done manually for the moment. That's
Okay.
just yeah, and we've been doing that for a while. So we do that manually. Once the platform is ready, then what we'll do is we'll start to feed that through onto the platform.
Okay. And are there any sort of projects that you guys are really excited about, and then you've already kind of like closed the deal? Oh,
So yeah, well, I can't really mention too much of them, but yeah, there's a
Yeah.
couple
okay.
of
Okay.
yeah, there's a couple of solar projects that we're in talks with at the moment
Right.
that are really exciting. And I visited a wind farm project that and I didn't know much about wind farms. They're really amazing. Yeah, they're really interesting. It really just to look inside a wind farm is absolutely amazing. So yeah,
Hmm.
there's a few projects out there. Like I was at one stage really interested in biodiversity, land conservation, and ag projects, but they're not there yet. It's the metrics surrounding measuring those. So that's why we've decided to just
Right.
clean renewable energy. That's it for the moment.
Yeah. Yeah. And then, yeah, later on, obviously, if the technology improves, we can also dabble into that if you want.
Yeah, definitely.
Okay. I think this industry is really exciting. Where do you see it, like the world of blockchain and impact investing going in the next 5 to 10 years?
what I've noticed, there's two sorts of worlds of tokenization that are sort of developing at the moment. There's one world of crypto native tokenization that's sort of occurring at the moment, and sort of the other world is occurring behind the scenes, and that's absolutely huge. That's the tokenization of pretty much everything. Like
Mm,
banks tokenizing, like the stock market will be tokenized at some point, I would
Hmm.
assume. Exchange traded funds. Private credit funds are massive. That's the biggest area of tokenization at the moment is private credit, private debt, private credit. Those all managed funds will be, you got private VC funds tokenized. Then you've got property is huge too as well, commercial property tokenization. But even bigger is bonds, being able to tokenize bonds and fixed interest products. So these areas are massive, and that will all happen as we go along. And then I don't know where the future goes from there. You got lending as well. So it's really exciting. And there was a company I was talking to 4 years ago while I was working called Calastone, Calastone, the UK company. And I was speaking to these guys 4 years ago, and we were talking about tokenization, and they were building tokenization platform back then 4 years ago.
mm-hmm,
Last week, they had a massive announcement that they'd just developed a tokenization distribution platform for fund managers to basically log in and tokenize their managed fund.
oh wow, that's
It's
crazy.
huge. And the funny
Yeah.
thing is, it wasn't noticed by a lot of the crypto native communities at all.
Yeah.
Mm,
But I saw that and I thought that's a huge announcement. That's massive.
yeah.
Yeah.
Mm.
So yeah, basically, yeah. Any fund manager that, but I mean, because for a fund manager, this
Their revenues,
decreases
right?
their cost. It gets rid of the administrative burden. Because if you look at it, to get someone onto an investment like a wholesale investor, it can take
Mm-hmm.
weeks because they have to
Yeah.
complete paperwork. They have to do AML, KYC, identity. They have to.
Yeah.
It goes backwards and forwards until the paperwork is done and proper. Right.
Mm-hmm.
This is all instant now through
Mm,
KYC, AML, through blockchain processes.
yeah.
Secondly, settlement is almost done. Their pricing structure. Yeah, it changes the whole game.
Yeah. So basically, any type of investment that regular retail investors couldn't have access to before, now they'll be able to have access to that because of the ability to tokenize it and put it on the blockchain. I
I'm
think
not
that's
sure
pretty
about
amazing.
retail, but wholesale investors definitely.
Okay, wholesale investors. Okay.
Yeah.
Yeah, because retail investors because remember risk. So
Mm-hmm.
you can't offer retail investors risky products that are illiquid because so it depends on the actual investment itself. Some
Mm-hmm.
products, yes, but a lot of them like yeah. So it depends on the risk and depends on the country as well. But yeah, for Australia, wholesale products definitely, yeah.
Yeah. So I think we've been talking for quite a bit already.
Almost now.
So I think we can move to the closing section. Suppose I want to get involved with crypto. I want to get involved with blockchain rather. Um, if I'm an entrepreneur looking to integrate blockchain technology, what sort of advice would you give me if I'm just first starting out?
Okay. I can't give you advice, I guess, on the crypto because I don't really know much about crypto.
Yeah.
But so the advice that I can give you is based on my background and my experience and my qualifications. And that is if you're wanting to create an investment platform to sell an investment product, the first thing to do is to start with the problem first, the existing way. So to look at
Yeah.
what investment product you want to sell and what's the problem you're solving. Then you need to ask the question, does it really need blockchain? Because blockchain is not cheap,
Hmm.
right? And does blockchain genuinely solve this problem better? If so, then go for it. Like,
Mm-hmm.
uh, for example, if you say, yeah, blockchain solves for fractionalization because I can lower the minimum investment amount, that's not a reason, because you can do that
Mm.
using crowdfunding, and you can do that cheap using crowdfunding, and it works fine at the moment. So do you see what I mean?
Yeah.
So yeah,
That's
yeah,
a really good
that's
point. I think a lot of the projects that you can see nowadays as well, and blockchain projects nowadays, some of them they don't really offer that much value. Some of them don't offer value at all, because as you said, existing real world projects can already do it better than blockchain projects can. Um, so definitely,
Yeah. The next question I want to ask, and this is one we love to ask all our guests, is do you have any favorite books that you would like to recommend? Me and Tong, we love reading, so any recommendations could be fiction, non-fiction, anything like that.
yeah, I do. Obviously, because this might help people better understand, I guess, financial products in the market. Stock Market Secrets by Marcus Padley. That
Okay.
he's quite a popular commentator in Australia. He was my old boss and my mentor when I started out as a young stockbroker. So the book really has a special place for me, I guess.
Mm-hmm.
It's an honest, practical, and sort of entertaining guide to how the stock market works, and from someone who's sort of lived it for decades. So if you're starting and you're wanting to be a startup founder that is looking to create a investment platform, you need to read this book, because you need to understand how the stock market works, how the economy works, and how that affects everything. Otherwise, you're just creating rubbish blockchain projects that don't have any utility and that are based on supply and demand. So
yeah,
I think it's really relevant, especially for crypto and tokens that are now driven primarily by stock market sentiment. And you can look at that, and you can see when the Nasdaq and the Dow Jones move, crypto moves instantly with it. So yeah.
yeah. Cool. So before we say bye to you, is there anything else you would like to share with our audience? Just any final words? So this could be um, a plug to your social media as well, or just like any way to connect with you.
Yeah, sure, definitely. Yeah, I guess if you're a wealth manager, investor, climate project developer, or anyone that's really just keen to sort of with what we're doing, we'd love for you to connect. We share, project opportunities, insights, and updates through our newsletter. It's called the Refi Playbook. We've got a link on our website, ReGenX, REGENX.io. So you can just click on the link at the top and then subscribe. That way you'll be on the loop on our progress. We're also raising pre-seed funding to fund the next stage. So far, we've been bootstrapped and we've been funded by a blockchain developer. So we're taking that next step to pre-seed raise to fund go-to-market strategy. So if you're on the lookout and you're an investor, also keen to have a chat to you as well.
That's great, Ishan. We'll put all the links you mentioned in our description as well, so anyone can easily access them. But thank you so much for coming on the podcast today. It was a really insightful conversation that we had, and I learned so much. So thank you for that.
No, thank you guys, and thank you for giving me the opportunity. It's been a pleasure.